And for more, we're joined by Alexander Giuliano, Managing Partner, Resonate Wealth Partners. Alex, thanks for your time today. So just picking up on that piece of news, Donald Trump allowing Nvidia's H200 chips to be shipped to approved customers in China in exchange for a 25% cut to the government. I mean, how significant is this policy shift for the semiconductor sector as well as the broader AI supply chain?
I think at the end of the day, the AI story is one of a multi-year economic transformation. And this piece of news only leads that story to continue. You know, when you look at the semiconductor industry, you really focus on the builders and enablers of that AI story and focusing on that transformation over time. If you're looking for the true structural winners in that space, you want the ones that have the profitability, the ability to take their cash flows and pivot if necessary to build out that story. And this just lets that story become easier in terms of developing the relationship between the U.S. and China.
Yeah, and the developments come as, you know, the S&P 500's rally appears to be losing steam some again. Yet tech was an outperformer. We're talking about names like Broadcom, Oracle advancing on those AI-related catalysts. Will AI continue to be the dominant, structural theme next year? I mean, you have said that AI is a genuine multi-year transformation.
Yeah, in terms of valuation story, you want to really focus on companies that can grow into those premium valuations. And while the AI story is still in the early stages, you're really looking for companies that can grow into those valuations over time. And so when you're looking at the chip players in particular, those builders and enablers, you want to be focused on companies that have the flight to safety and the quality aspect that can take you there over the future.
Yeah, so following up that, how would you assess, the risks, rewards of these mega cap names expanding into semicon supply chains? I'm talking about Broadcom's work with Microsoft on those custom chips.
Yeah, so when you're talking about the individual theme itself, you don't want to focus on the companies that are operating on borrowed enthusiasm in the space, but rather the ones that are really investing in the future. And so people have done spent a great deal of time trying to determine if we're in an AI bubble of sorts. But I think the real focus should be on focusing on those builders and enablers and really determining as the cycle changes, if there's a slowdown in sentiment over time, or if there's a possibility of a recession coming down the line. You really want to focus on those companies that can build out and really take advantage of the fact that they've made those structural investments over time and can utilize it to their advantage if period weakness comes through.
Yeah, and Alex, you noted that December is typically a strong month for equities, and this year's volatility may have helped to reset sentiment. What are you watching out for to see if the seasonal tailwind is in fact intact this year?
Yeah, one of the big stories is not only just the Fed rate cutting cycle, but also the massive move we've had since the April tariff volatility that we faced. And you may have the dynamic where especially fund managers or people who've had cash on the sidelines and have been too slow to act in recovery of that transition, maybe wanting to focus on catching up, if you will, as we head into year end. And it also provides the possibility for folks to continue to invest in their winners, as they may be reluctant to take chips off the table from a tax perspective headed into year end, and are more likely to trim their losers in this environment. And that momentum continuing in the names that have worked, especially in the back half of the year, may continue through the end of the year for those reasons.
Yeah, and just to follow up on the Fed point, there is just wide expectation there for a quarter point cut soon this week. But traders are really anxious about next year's rate path. And so how are you positioning portfolios ahead of what is expected to be one of the most contentious rate decisions this year? I mean, given, deep divisions emerging within the FOMC and how this divided Fed will affect its credibility, its policy next year.
Well, the Fed is obviously certainly managing a lot, especially when it comes to market expectations headed into next year. You have the underpinning of a political environment with the United States entering midterm elections in the back half of the year. And with the new Fed election, the individual that Trump ends up appointing to the Fed chair position from a nomination perspective will continue to have to serve out their term, barring anything unforeseen after Trump's term is going to end. And so the possibility that they may want to rubber stamp and put their own policy projections into place over time is something that they would be sensitive to. We also have to remember that the Fed chair is just one individual on a committee, right? And so the political sensitivities is one aspect of things, but you also have the existing Federal Reserve Board members who are trying to manage the softening and weakness you're seeing in the job numbers that are playing out, while also managing inflation. While stable right now is obviously a concern that the tariff dynamics that have been in place may continue to raise inflation. And so balancing both the political end of things, the new leadership piece, and also managing those expectations over time is really important for the new Fed chair. I would also say that the markets and their expectations can be swayed by things that the Fed just says rather than simply acting. And so there's an opportunity where potentially we get a rate cut coming up this week, but we may face a dynamic where there's a lot of managing of expectations, especially in the first half of next year, rather than action by the Fed, to give that opportunity for the Fed to really see what the data looks like and buy some time to get through the political cycle in the United States.
All right, Alexander Giuliano there, managing partner at Resonate Wealth Partners. Thanks for your time. And still to come on Asia.